Most traders overcomplicated market structure is just highs and lows. Once you master that, everything else clicks. Let me show you in 3 minutes. Start with the higher time frame. Mark your swing highs and lows. Higher highs, higher lows means the bias is bullish. Lower highs, lower lows means the bias is bearish. Equal highs and lows means there is liquidity in the market. Liquidity zone. Inside that higher time frame move, you will find internal structure. This is where you refine your entry. If higher time frame is bullish, wait for 15 minutes to break bullish. Pullbacks often mitigate fair value gaps or demand zones. Watch for break of structure. When price breaks a previous high or low with momentum, that's your signal the internal structure has shifted. Break of structure to the upside means price is bullish. Break of structure to the downside means price is bearish. This confirms your higher time frame bias and tells you where to look for entries. Mark the break of structure, look for fair value gaps or clean demand, and prepare for entry. Here is an example of market structure. We start with the bearish move on the 4-hour chart. Price dropped and left behind some supply zones and fair value gaps. Later, price came back up to mitigate one of those supply, which is the extreme supply. That means it touched and reacted. Now we go to the 15-minute chart to look for entries. We watch how price moves. We want to see a break of structure. That means price breaks a previous low with strong momentum. It shows sellers are in control again. Once we see break of structure, we wait for price to pull back. It usually comes back to touch either supply or fair value cap. You can place a limit order at the fair value cap. Stop loss above the supply. If price comes back and taps it, you enter. If it doesn't, no problem. You still catch the move by following the higher time frame trend on the lower time frame. On this trade, let's target 1 to 5. We have another break of structure. Price left another fair value cap with supply. You do the same thing over and over again. Set the limit order at the fair value cap. Stop loss above the supply. Target 1 to 5 RR, risk to reward ratio. You can even target, as you can see, all these imbalances up until here, until this demand. As you can see, on first trade, you would have made 10 risk to reward ratio, and the second trade, you would have made 9 risk to reward ratio. That is structure. Higher time frame bias, lower time frame refine entry at demand and supply or fair value gaps. Once you understand how liquidity balances with structure, you stop chasing and start anticipating. If you want to learn how I trade this daily with markups, mentorship, and my full system, check the link below.